Hey, what's going on? This is Modern Adulting, and this is our first episode in our video series on credit. We're going to be talking about what credit is, what credit really is. If people understood this thing about credit, they would be able to understand why it's such a big deal. In college, I pretty much treated credit more along the lines of extra cash I could use in a pinch. I had the Wells Fargo college card. That was a credit card that they kind of started you off on. My parents didn't really teach me about credit at all, but I just knew that something could go wrong if you didn't pay your bills or pay your credit back on time. So I tried my best to avoid using it, but let's be honest, in college, things can get rough sometimes. Definitely got into some situations trying to do some little business ventures with fixing people's phones, and got into a situation where I messed up a repair and I had to replace a very expensive phone, and I didn't have that cash, so I had to use my credit card. That really screwed me over, and I think I had like $1,000 when I was a sophomore or junior. When I messed that up till I graduated, my card was always kind of almost maxed out, and so that didn't really give me good starting foundation. And it's kind of crazy that I never got that in collections or anything. I did keep up with my minimum payments, so that might be the first pro tip, that just make sure if you are in dire straits, make sure you keep up with the payments. So when I graduated and finally learned a little bit about credit, I had a pretty bad score. It wasn't terrible, but it was subpar. It was in the 600s. But in this video, I wanted to talk about the more nuanced things that people do not know about credit. What is credit really, though? So the first thing you have to know about credit in practice is that credit is essentially a measure of your trustworthiness. If you have a good credit score, banks and other lenders will be willing to give you money at a cheaper rate. You'll be able to borrow money at a cheaper price. You'll pay less interest on the money that you borrowed if you have $1,000 credit line and you max it out. If you had good credit, the amount that you'd pay extra would be a lot less than if you had bad credit. And usually these percentages can range, if it's a credit card, it can be like 11-ish% to even 30 or 50%, depending on how bad or good your credit is. So you can imagine if you have a credit interest rate of about 11-10% and you borrowed $1,000, then you'd be on the hook for $100 extra on top of that original amount every year, and it'd compound. The next thing you have to know about credit is the score part of it. What is a credit score? A measure of how much risk the bank will be taking on you if they give money to you. How likely are you to default, not pay back your loans? Typically, credit scores range from 300 to 850. Now, some scales can even go up to 900. So a score of 300 would be a terrible score, and a score of 850 would be impeccable credit, like flawless credit. Now, you can even have no credit history, which is just as bad as a bad score. You are treated as a very likely person to default, so you would not really be able to get good rates. So it's a lot better to have a good credit score. It might come off that, hey, why even play the credit game? Why do something like borrow money? A lot of people kind of see that as a bad thing, to have to owe money. It's like almost immoral, right? In many cases, even being able to maybe get an apartment or like get a cell phone plan, etc. Like these things, there's other services and other things you might want to purchase that will need you to provide your credit history. So it's become almost impossible in the modern age to kind of live without any kind of credit score. Here we get to the fun part. The secret is everything is credit. Yeah, everything is credit. Everything is built on an IOU, especially since the United States and many other countries moved away from currency that was pegged to a physical object like gold, now moving into the modern fiat currency. It's all credit. Your money represents an IOU. This is something, a more complicated representation of people owing people favors, being in debt to each other. This is a whole debt system. And that's why it's really important to have a credit score and credit history built up, because the whole system is based on debt. And when you have a system based on debt, on owing somebody, then that means the people who dwell in it are the people who can show they are good for it, right? And the people who can be trusted to pay debts in a upside down kind of way. If people trust you to pay debts, you pay less of it. You don't have to pay as much. And I'll show you why this is the case. My perspective on this is highly influenced by a very good book I read not too long ago, and I reread all the time. This book is called Debt, the First 5,000 Years. And in this book, the author explores the mystery of barter and breaks it down, spoiler alert, that barter, shuck and barter, was never really a thing. When people lived in small communities, they would go on a credit system. They would trade things more or less on a credit system. And it worked like this. Since you all know me as your trusty guide here to modern adulting, and you probably hold me in high esteem, perhaps if I came by and asked you for something, maybe you're a shoemaker and you just made some cool shoes. I need some shoes. I'll just say, hey, can I, let me get those shoes and I'll owe you one. Let's write it down in paper. And that way we both don't forget. I write it down. Kevin owes you. Now, I'm actually well regarded and of high esteem in my community. So one day the bread maker, you go and visit the bread maker, and one day you need some food, you need some bread. So you walk in there and you're like, hey, bread maker, could I get some bread? And he's like, sure, but I don't need any shoes right now. You know, that would kind of break down if it was shuck and barter, if you had to barter. But since he knows me and I owe you a favor in writing, how about you just give him that note? You could say, well, Kevin owes me a favor and I got it here in writing. He can owe you a favor, and how about you give me the equivalent of what you think this is worth in bread? And since the bread maker knows me, holds me in high regard, knows I'm good for it, gives you the bread. And that's because I have high trustworthiness, high credit in my community. So this can go on forever. You guys can continue to trade your Kevin dollars and no one would ever need me to actually pay it back. It's kind of weird because as soon as someone actually comes and collects on that favor from me, it kind of just killed the market. There's no more debt to trade. There's no more money in circulation. It's crazy. So essentially what has happened now is the money that is circulated is guaranteed by the United States. So it's the government owes everybody the money. And because we all trust the government has A1 rating. The US government has an A1 credit rating for everybody. We will take it as currency because we know the government pays its debts. It has to. It's just the way it is. We trust that it will always pay its debts. So we will continue to trade this currency. And what we realized initially we had, the gold system and silver, precious metals, where you can go to a bank and get back the equivalent in gold. But that kind of eliminates money from the system. And it was getting kind of bad because banks were involved in this thing called fractional reserve banking, where they would leverage the amount of gold in their vaults, the amount of precious metals in their vaults, and lend out way more notes, credits, IOUs, debt than actually was gold. So when we have big market crashes and everybody comes to collect on their IOUs, there's just not enough to go around. Some people think this is really bad, but there are limitations to the gold system. Well, that is, some people think we should go back to the gold system. But the limitation is, as I explained, when you collect on that thing, when you try to get your precious metals back, etc., you kind of remove money from the monetary system. So it can be very difficult to grow an economy and fund more and more things when you're restrained by the amount of money that could possibly be there. How many possible ways can you divide gold? Now, I won't argue which system is better or not, but the reality of the fact is now we are in a fiat system. The government owes technically on those things, but no one expects to collect on that favor, that value of the IOU, the dollar or $100 of value that the government technically owes. But essentially it's kind of a pullback to exactly what, powered trade from the beginning, which was credit. If you have high confidence in me and my ability to pay back my debts, then you trade the debt, the things that I owe, as a currency. And so we've done that with the government because the government is this big, overlord kind of thing. We all know it. We all trust it. We all expect it to be able to pay back its debts. So we never ask it to. So kind of the trillions of dollars that the government is in debt, it kind of just shows how good their credit is. There is a quote that goes like, if you owe the bank $100, you owe the bank $100. Now, if you owe the bank $100 million, you own that bank. You probably own that bank. That is the thing that I think not a lot of people understand about credit and the system that we're in, and why it's really important to get a wrangle around these things. If you are able to understand and control and to use debt to your advantage in this system, you can do very well for yourself, and you will be that much closer to being a modern adult. Anyways, this has been Modern Adulting. Thanks for watching. Like, subscribe. Let me know what you thought about Intro to Credit. Let me know what you think about the gold system. Should we go back to it? Is fiat better? Talk to you later. Modern Adulting out.